Last year, someone's grandma beat a lot of hedge fund managers and other investment professionals. And it's not because she won the lottery, was holding some cryptocurrency, some obscure investment, or some AI gobbledygook. She was holding gold, and it's traditionally seen as a older generation's asset class. My dad holds gold, cool story, good for him. But I want to say it's having a quiet resurgence, and it's been anything but quiet. Last year, gold was up nearly 60%. In fact, as of January, like now as I'm making this video, it's up another nearly 10%, which is just insane. And you need to understand why there's this surge, what's driving it, what's going on, things you need to consider specifically for you as an investor. Should you be having it in your portfolio, your pension, and for retirement planning? So, what is driving this spike? When things get weird, inflation, geopolitical issues, markets, gold suddenly becomes cool again because it's seen as a store of value. And there's many different ways to buy gold, whether it's physical or just a fund that buys into gold. And as an investor, it's really important for you to understand what's driving it. I'm not going to say his name because there's an investment professional that has said the reason for gold's surgence last year. And I mean, we've had a really weird 5 or 6 years. Think about COVID, think about the tech crisis back in 2022, think about Trump's tariffs just in April. Think about the wars that are currently going on all over the world. Even in Greenland, which is just insane. It's a different topic. I could talk about it for hours. But fundamentally, lots of Russian assets got seized. So they started buying an asset class, e.g., gold. Central banks, because of lots of uncertainty, decided to also buy into gold. And then me and you, which are known as retail investors, the general consumer customer, we also bought into gold as well. And that just kept causing it to go up and up and up. And it's pretty understandable and valid for it to increase because there's so much tension. I can't think of almost any country in the world where there isn't some kind of tension, whether it's with the politicians in play. I mean, even in the UK, we're still unsure who should be running the country. In France as well. So there's lots of things going on, and that uncertainty creates the need for people to find somewhere, specifically during war times. Gold is seen as that store of value, and inflation has been at record highs, apart from the last few months where it started to kind of dull down or become a bit of a lull for the moment. So interest rates have been dropping over the last 12 months. But regardless of that, gold has been seen as an asset class that lots of people are looking to buy. Gold doesn't rely on some company's data. It doesn't rely on a CEO, investment returns, its accounting periods. It's just gold. It's boring. It's a simple asset class. And that's exactly why it's interesting to a lot of people at the moment, because it's not reliant on anything else. And it's very rare that gold goes down in price, specifically for a sustained period of time. It basically maintains its price and continues along a trajectory just to beat or meet inflation every single year. And then it has these spikes like we're seeing now. So for you as the investor, you need to understand that gold is not going to replace, we're not going to keep having these massive waves. I don't know what's going to happen. I don't have a crystal ball, but we can't see it as an alternative for other equities where you've got really good compound growth, really good options in different industries, geographic locations, sectors. So it's not meant to replace equities, but I think it's there to help balance as a diversifier. And that's kind of how you should be seeing it as the investor, specifically if you're in retirement and you're genuinely worried about what's going on. Gold could be, and I'm not saying it is, but it could be a really good place for you to hold a little bit of your money for these uncertain times. The other thing is usually when the markets have their worst days, usually the best days follow after from an investment perspective because the markets start to recover. And lots of people, buy the dip, as you've probably heard that saying. So hopefully that's given you a lot of things to think about and consider whether it's something you would want. And that's really my video. I just wanted to explain what's going on. So thank you very much for watching, and I'll see you in the next one.